Okay, we're on the air. Thank you, Colin, for joining us today. We have with us Colin from Blockpoint Capital, which is a hedge fund dedicated to cryptocurrencies.
Yeah, correct. Trade much cryptocurrencies exclusively.
Yeah, so please explain what you do and a little bit of a background.
Yeah, a little bit about kind of the core strategies first is, so we kind of take a multi-strategy approach where kind of, let's say half of the allocation is based upon algorithmic trading strategies, including like some momentum, market making, fair amount of arbitrage. And then we have another set of allocation to, some ICOs as well as research-driven investments. So we kind of keep a portfolio on the discretionary allocation, about 15 coins, 10 to 15 coins. And we run about, 4 different trading algorithms. And my background, I came from kind of I'm from Silicon Valley, from California. And I worked in venture capital for a bit in Silicon Valley, working sole analyst under managing director of like around 50 million, investing in both public and private market artificial intelligence and big data investments. Then moved into the kind of hedge fund realm, working on a options fund trading volatility, and then moved back into kind of starting my own fund within cryptocurrencies.
Okay, and yeah, go ahead.
And that's kind of what I really like about crypto is, so I had kind of experience as a hedge fund and experience in venture capital. And to be successful within crypto, I feel like you have to have both of these skill sets, understanding like the vision, the growth trajectories of the project, while also keeping in the backdrop of like, what is like the public sentiment to date and how has it changed like in real time? Like, as a startup, I made my own startup before. As a startup, you pivot, you change, and you can basically, create a whole new project while no one is watching other than your investor. But within cryptocurrencies, when something flops or something changes, like there's an immediate reaction from the market, which is going to, either sell off the coin or buy a ton of it, both very dramatic. So you have to keep that in mind, like investing in startups, but also like keeping them in track every single day at every single moment is very difficult for the startups. But also as an investor, it's something you have to keep in mind. Like, what is the long-term like potential versus what are the short-term catalysts?
So you're talking about more doing some very good due diligence, yeah, and what they're doing, et cetera, right?
Yeah, due diligence on the, yeah.
But yeah, I mean, at the end of the day, you're trading the markets.
Yes. So at the end of the day, we're trading, but with at the backdrop of investing as well. Because basically when you're investing and trading, then you become a hybrid where you do research and you're trading on assets that you like. It's called scalping. So if you're scalping, you're holding a long position in a coin and something you believe in at its core, but you're trading around multiple price levels to accumulate more coins. And you're going to do that through like basically like what the sentiments are, what the catalysts are, and how everyone else is from that's for a discretionary allocation is like trading, but investing at the same time. So like very important for a lot of crypto investments if you want to maximize.
That's correct. And now, but how do you get that information? How is the information flow? Because we don't have like the traditional channels of information. I mean, sometimes crypto can be up or down. Why they're up or down? Because
crypto, within crypto, I mean, each coin itself has its own community, like a company. And you have to be in the community to understand the project. So being within the community means, Telegram, there's Reddit, there's like, talking to the founders, there's meeting them in person, and seeing like, so the community is going to have things which they judge as being like a good indicator for the project or a bad indicator for the project. So example, like something I was trading earlier was a coin called Z Classic. Basically, I was invested some time ago, back when they announced that they were going to try and fork out of Bitcoin. And what happened was the coin actually went from like around $4 to around $100 in like around 7 days, because people started to look at the potential of a Bitcoin fork, and that came from the community. It wasn't like, it wasn't completely random. People saw they could now price this coin against other Bitcoin forks. And that type of sentiment comes from actually being like in the community, talking to the founder, talking to the project members. And then you can and then you have a sense of when a price is overbought from a project which you like, when nothing has changed, but the value has dramatically changed. So like I sold when there was no news, but the price had gone like 25 times higher.
But how does a trader like you deals with asymmetry of information? I mean, you obviously know that some people would know stuff that you don't know.
Yeah, so some people are going to know stuff that you don't know, and there's a lot of things that people figure out from different channels. There's not asymmetry information. Like I found out, it was on Twitter, everyone knew it was there, that you could have a Bitcoin private, but there's so many coins, the market moves so fast, there's no one who knows everything. So they figure out through big channels, which the big channels are going to be like your YouTube, people on YouTube, basically people in like large Telegram channels are going to post about things. And at that point, it becomes like everyone knows it. But prior to that, there's a small community which is developing the project, which actually knows about it and takes the time to like figure it out. So while the information is all available, there's not enough time for everyone to know everything, because there's too much that happens in all at one moment.
You were talking about algos earlier. Is there a way, because today we know that for example, a lot of the high frequency guys, they do information catalyst plays, which is basically they get information from various sources and they integrate it into their model, and then that information triggers a trade. Something that is possible to do today in crypto, or first of all, is this possible to do low latency type of execution, or not
so
something?
In terms of latency and execution, it's not really possible at a retail level to do high frequency trading. I mean, just the rate at which you can pull data from the exchanges, you can't execute, and sometimes the exchanges go down. So like reliable algorithmic trading, like a high frequency, does not exist from my perspective. So what we do is, you can pull data at like 1 second intervals, but in traditional markets, if you're trading foreign exchange on like millisecond to nanosecond levels, it's not the same. So capturing information is different. It's just at a different speed. So you don't have to be as fast as the servers, and the data is not coming in as fast as like in traditional markets. That's the question.
So you cannot do any algos?
No, you can do algos. It's just not at the same level as a normal. It's not going to be like it is in the traditional markets. Your latency of your execution and the like time window for your trades are going to be slower.
Yeah, and how does your algo react to trading freezes and stuff like that? Because otherwise,
basically, when when the exchange shuts down, you can't trade anymore, as there's no. Yeah. Basically, when or like say there's a freeze happens, fairly often, that the systems just turn off. because it can't. There's no trading on the exchange.
Okay. So on another front, how do you see the institutions and the fact that there's, as you know, there are more and more hedge funds coming into the plane?
Well, hedge funds in their traditional sense, I think, don't really exist that much in cryptocurrencies. Because at cryptocurrencies, from an institutional level of like, you know, securing your investment, trading at a higher frequency by hand, you know, at like, say you were trading a stock versus trading a coin, to secure your investment with the coin, most institutional investors are going to store their coins in cold storage, which takes, you know, longer time, and so they take like longer theses. So most investors that are coming in are probably, you know, from what I know on the institutional level, more on the venture capital side and inside of ICOs, and then you know some in the larger coins where liquidity is present on some of the major exchanges, because you have to pull the coins offline. So investing in public coins, which haven't finished their product yet, which some of them I don't see very many institutional buyers there. And some of the smaller cap coins, which, you know, do double or triple overnight, most of those investors are retail.
Okay, so we're talking about mainly a retail market here.
Yes, it is mainly a retail market.
Okay. And when do you expect institutions to come in?
Possibly
Never.
No, not never. They're definitely not never. But by the end of 2018, definitely more institutions, as the market will in fact grow. I think there's a lot to be played out in terms of scalability and actually, like, you know, building a better network between, you know, Bitcoin and Ethereum. Having clogged networks is bad for investors. It's bad for just Bitcoin in general. And once institutional investors start to learn more about like how things operate and how do you buy certain coins on certain exchanges, because it's hard ecosystem to learn.
Yeah, totally. So okay, let's talk a bit about the markets. Okay, what's hot?
What's hot? Everything.
What's hot?
Right now? Well, we're having a down day today, but what's hot is pretty much everything that is not. Everything on Binance is hot right now. So basically, coins that are direct use cases. So like exchanges matter a lot. Who is going to be placing the trades versus you, and what you're going to be investing in is very deterministic of, like, you know, what's the sentiment is deterministic of who else is going to trade. So new coins that come out listed on Binance, a lot of investors are just on Binance looking at the newest coin that just came out and will buy that new coin because they think other people will do that. So in the past week, 2 weeks, that's been very hot in terms of, you just see dramatic price appreciations there.
And okay, so let's say,
what's that?
Okay, so Binance is hot and all coins on Binance are hot. Is that what you're saying?
Very hot. And also a lot of coins which have smaller market capitalizations are just invested in, even though they add no value to the ecosystem, because other participants, other people in the market think that it might get pumped, or like people might start buying just because there's a low market cap, which is a bit ridiculous. But a lot of these coins, which, you know, they do rise very fast in value and they don't have any core differentiating factors, are not really worth what they are trading at, even though they might be hot.
So okay. So Binance is definitely the place to be right now, huh? for the altcoin trading.
Yes, if you're altcoin trading, you are going to be on Binance. But that's if you want to do like literally no research. If you're a pure trader, like you're just looking at charts and you're looking for breakouts and like overbuying and you want to trade a lot, then you want to be on Binance. And but I think there's a lot of great tokens outside of Binance.
Where is the hangout of all these guys that do the trading? Where do they hang out? Do they have special groups? Do they have?
Yeah. So
if someone wants to get into the game, how does he do it?
They basically, if you want to connect with a lot of people that are trading, you just go on Telegram. So each of these coins has their own Telegram, and each of the coins is going to have their own like community where people start joining. If a price goes up, they'll just enter the Telegram group and start talking about the coin and starting to learn more about each of the coins. So I think some of the channels are directly linked to the coins themselves.
Okay, so Telegram it's where it's at, right?
Yeah, everyone's on Telegram.
It's not Twitter, it's not Facebook, it's not all that.
There's some people on Twitter and Facebook, but I think
the pros, where are they?
Yeah, if you're gonna talk to the people, if you're gonna talk to like the real community members, and you actually like want to interact with people who are building the project, stuff like that, you're going to be on Telegram.
Okay, cool. Now we know. So tell me about are you raising any money? What's the deal? What's the capital intro? Something cool coming up?
Yeah, so so right now I'm just trading on some of my partners' capital. I'm on a team, manage about a team of 7 traders. So we we have about 4 developers, so quantitative developers, and then we have someone who manages kind of volatility strategies. So some of Bitcoin options trading and Bitcoin futures trading, myself, and then right now we're just trading our own money. We've been doing really well, especially the last 2 months. And right now, definitely interested in raising more money, going through the processes with some institutional investors as in the short run here, but just keep on trading our own money and looking forward to raising more as well.
Perfect. Can I have some numbers, or that's completely undisclosable?
For our numbers, I'll announce once we are able to close the round. I'll disclose it with you, but just for now, it's
no worries. No worries. Last question: when you come back to Hong Kong, will you go back to Hong Kong or you come to the peak?
Would I go back to Hong Kong? Probably not go back to Hong Kong, but
okay. Yeah. So now I got an idea of your numbers. Okay, cool. Thank you very much for your time. Thank you for your insight. Keep in touch.
Yeah, thanks.
Good luck. Cheers.